Welcome to AM Best Audio.
I'm John Weber for AM Best TV, and we're at Artemis in New York City. Speaking today with Matt Tuite. Matt's a director at AM Best. Matt, so glad you could join us today.
Yeah, thanks, John. It's great to be with you.
So, Matt, let's talk a little bit about the ILS market. And the market reached a record $107 billion in capacity at the end of 2024. Do you think there are factors that can either sustain that growth or hinder it for that matter?
Yeah, I mean, it's really interesting. The capacity reached new heights, and there's always the interplay of the supply and demand dynamics in the ILS market. So, we're coming off of 2 years with really stellar returns for the ILS market, and so that's contributing to the retained earnings in the market, and those are eligible to be redeployed into new transactions going forward. So that's been a strong driver of growth. There's also been we're hearing reports of new capital inflows from either incumbent investors or some new investors coming into the market, particularly in the cat bond space, more so than other spaces. So that's clearly a driver of the recent new heights of the capacity in the market. And we'll see where we go from here. 2025, we're having this conversation at the beginning of February. It's an interesting time, it's an interesting year, because unfortunately, very sadly, we've had those horrific wildfires in California. So it's still early days on that. That's going to take time to play out, but that could certainly influence how capacity shapes up for the ILS market over the rest of 2025.
You mentioned cat bonds. What's driving cat bond issuance these days?
So cat bonds have been popular on both from a cedent perspective and also from a capacity provider, an investor perspective. That's the segment within the ILS market that has had the most robust growth. It's been the most consistent across various dimensions. So, I mean, from the cedent perspective, cedents are interested in having multiple sources of reinsurance capacity. So, they like to be able to tap the traditional market, but having this capital markets capacity is also worthwhile to them. And, we see that in a few different ways. We see, each year in these last few years, we've seen, new sponsors coming to the market, be it 8 or 9 or 10 and so on. So that's very, encouraging and promising on the demand side. You also see sponsors who were on hiatus for a while. Maybe they issued something 10 years ago and now they're coming back to the market. So that's encouraging on the demand side. And you also see a diversity of different sponsors. You see primary insurers, you see some reinsurers tapping the market for retrocession capacity, and you also see government affiliated sponsors like a Florida Citizens, for example. So those are all demand drivers. And then on the supply side, cat bonds, the investors in cat bonds appreciate the low correlations in that market. And now adding to that, in the past 2 years, they've seen very, very robust returns in that market. So, they're watching to see how pricing, or the spread levels, risk-adjusted spread levels, shake up in that market and where they stand. But they have some wins at their back, let's say, in terms of being willing to deploy more capital into the space. Again, probably during this conversation, I'll sound like a broken record, but the California wildfires, it's something that needs to be worked through. And I don't think anyone's in the reinsurance or ILS market is panicked over them. I think they just, kind of just working through and trying to understand what the full implications are for the market at this time. So, we'll see how that shakes out. It's still very early days on that front.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
So do you think investor appetite is evolving?
I mean, there could be some element to that. I mean, we hear different reports about different investors, coming in at different points in this market cycle. Some longtime incumbents may have slowed down for a bit and now are starting to come back in as they've seen multiple years of good returns. And then there have also been some new investors coming into the space who have gotten educated about it and are reading more about it and saying, okay, this looks like a favorable time to get in.
Matt, what role do you see sidecars playing in the ILS market?
Yeah, so the ILS market. We hear a lot about certainly catastrophe bonds in that market, but there are other ILS flavors of ILS. So sidecars are one of them. That market, the outside of 144A catastrophe bonds, the other segments of the ILS market can tend to be a little bit more opaque. So it's not always easy to decipher exactly what's happening there, but from what we understand, there's a little bit of an uptick in capacity in the sidecar space in 2024, and that might be driven by a combination of different things. One is that those are typically collateralized quota share arrangements, and investors may be interested to get in on the action, so to speak, of the improvements in the underlying pricing that's gone on some of the underlying insurance deals that go into those sidecars. Some other things that may impact is we've heard from our contacts in the ILS market that certainly cat bonds have gotten a lot of buzz and a lot of news, and they've had good returns and strong growth. And in some of those conversations, some of the ILS managers have said that cat bonds can be sometimes viewed as an entry point into the ILS world more broadly, and then once those investors sort of get a taste of the cat bond, get a taste of those returns, they say, okay, well, are there other ways that I can get some exposure to insurance risk? Are there other opportunities out there? And so we could be seeing some of that with respect to sidecars or collateralized re, that some of these investors might start kicking the tires on other flavors of ILS.
Interesting time. Matt, thank you so much for taking the time to speak with us today.
Thanks very much, Sean. Great to be with you.
And from Artemis in New York, I'm John Weber for AM Best TV.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.